ES1 just printed its first daily chalk right after a fresh break of structure, and two completely different methods, smart money concepts and the popular retail fib tool, are pointing at almost the exact same price shelf below us. Stay with me.
We're on ES1, the S&P 500 E-mini futures, and the weekly is still purely bullish. Clean higher highs and higher lows all the way up. The daily and 4H are pulling back, so we don't have full alignment right now. But that's exactly why this setup matters. The higher time frame hasn't been damaged, it's just breathing.
On the weekly, the trend structure is textbook bullish. BOS confirming continuation, no chalk in sight. But zoom into the daily and you'll see the first crack. A BOS into new highs, immediately followed by a chalk just underneath it. Structure's still bullish, but that's an early caution flag worth respecting. There's untested buy-side liquidity resting above the recent high, and sell-side liquidity below the current swing lows that price hasn't swept yet. Right now, we're approaching that liquidity, not sweeping it, and this pullback has come in noticeably sharper and faster than the last few we've tracked.
The daily shows a clean order block and FVG stacked together, sitting in the discount half of the recent range. On the 4H, price is working its way down toward that shelf, with resistance from a leftover supply FVG sitting above us. This zone is untested and structurally medium to high confluence. Now here's the fun part. Mapping the popular fib golden zone onto the same swing puts it almost exactly on top of our SMC zone. These two methods disagree more often than not, so when they line up like this, it's worth paying attention. Whether you trade fib or the full system, you'd be watching the same shelf.
Right now, entry conditions are not met. We're waiting for price to actually trade into that zone and then print a displacement candle, a rejection wick, or a lower time frame break of structure back up before anything is actionable.
If this plays out, we're looking at a long from that shelf, stop below the zone, with our first target back at the untested high and a second target beyond that. We're risking roughly 1 to get somewhere between 2 and almost 4 in return. But the idea is dead. Full stop if we get a daily close back below the swing low that anchors this entire zone, or a bearish clock on the daily. That's bigger than just the stop loss being touched. HTF bias is green. The weekly is clearly bullish. Liquidity is amber. We're approaching the pool, not there yet. Zone quality is green. Solid OB and FVG confluence. OTE is red. We haven't retraced into it. PA confirmation is red. Nothing to confirm yet. Fib confluence is green. The popular method agrees with our zone. That's 3 out of 6. Medium confidence. A real watch list setup, not an active trade yet. Conditions are building. Stay patient. Let price come to you. Do not force it. We have two methods agreeing on a zone and a bullish higher time frame behind us, but no confirmation yet. That gap between the zone looks right and the trade is confirmed is exactly where discipline separates good traders from impatient ones. Remember, this is market education, not financial advice, so always manage your own risk. Thanks for watching. Drop your own bias on ES1 in the comments. Grab the free Fib plus Traffic Light checklist in the description. And if this helped, like and subscribe for the next analysis. Stay sharp, stay patient, and stay in the zone.